Alrighty, Wednesday, September 18th, 2024. Jason Shapiro coming to you on Fed Day. And Fed Day certainly didn't disappoint today. We got the 50 basis points rather than the 25 basis points, which was halfway expected and halfway not. And we got the volatility that we get on things like that. And some interesting things to think about today. Let's start with this. Is 50 points, was that good or bad? Let's not think about what happened. Let's think about going in. And there was an argument there by quite a few people who I personally think are fades, but the argument was that 50 was bearish because it indicated some kind of signal from the Fed that things were weaker than we are currently seeing. And so they're scared of this weakness, so they went more than expected. And in that light, the fact that stocks went down really is not that much of a surprise, right? So with stock the news failure today, I would argue that that's questionable, and certainly not strong enough for me to take a short in the stock market. I think that there were some more important things. Let's start with bonds. Bonds sold off hard. And I've talked about this numerous times, and I'm leading into this Fed meeting. I've been discussing this for months. But the idea that the Fed is cutting rates a little bit more aggressively than even expected into what has really been a strong economy and strong asset prices, to me, would be bearish. The long end. We know the short end is going to stick to what the Fed is doing, whereas the long end is going to move based on future growth and inflation expectations. And the more the Fed cuts, the more those future expectations are going to go up, and therefore the more bearish it is bonds. And that's pretty much exactly what happened, And the first move clearly was up in bonds. And then it failed. That to me is everything here. Okay. And that is what I believe drove everything. We can look at things like gold, which sold off today. Well, wouldn't a 50 basis point cut be very bullish gold in this liquidity environment? And I think the answer would be yes. And it certainly was right after the rate cut, but that failed too. Now, did that fail because people are too long, which arguably they are? We can look at the positioning, and we see that speculators are quite long. Now, they're not at this max long level that gets me short, so I can't short this move, but they're certainly very long. And that's could be called a news failure. And if you wanted to trade that, you would be short versus today's high. As I mentioned, can't have that trade on because it's not to the level that I need it to be. But look, I miss trades all the time. But again, was that because the bonds were so weak, therefore rates went up, and therefore that was bad for gold? I think you could probably make that argument too. Look, even the short end was down. 5 years were down. 2 years were down. What were 2-year notes doing down today for? I have no idea. 30 years I can justify. 2 years, much harder. Another interesting one is the yen. Now the yen, this is the most long speculators have been yen in a very long time, as you can see here. And the yen should have been up today. If there was a news failure today, it was yen. Okay. Higher rates means higher dollar. And, you're getting the Fed cutting more aggressively, arguably, than expected. And you have expectations that the Bank of Japan will be raising rates at some point. So that interest rate differential is growing, right? Yen should be going up on that. And again, it did today for a minute. And then it completely failed, right? Again, just like everything else, completely failed. If there was one that I would take looking at all these reversals, that's the one I would take personally, based on positioning and based on news. And look, the yen is also supposed to be going up when stocks go down. Well, stocks went down and the yen didn't go up. It went down. If there were any of these reversal days I would want to trade, it would be yen. Again, based on the positioning and based on sort of what should have happened. There really was no reason that the yen should have been down today, from what I can tell. And yet it was. Now, we can go back and say, well, U.S. rates were up. That's bullish dollar, and that's why the yen went down. And again, that could be argued to be the case, but I still think the interest rate differential expectations are growing in yen, and that should be bullish yen, and it wasn't. So which one of these reversals do we take? Stocks, bonds, yen, gold. Me, I would take the yen over any other one. They're probably all pretty correlated, but I would take the yen. So as usual, a lot more questions than answers here. It really starts with, was this bullish? And I don't know that we can make the argument that it was bullish, because a lot of people do want to believe that this is a bearish thing, that they're cutting rates faster than expected. So we have to be careful there on trying to figure out what the reaction was. I don't know the exact answer. Nobody knows the exact answer. We can only read it as we see it, but a lot of things do take in consideration there. For me, if I'm going to short something, because I'm a position trader, I'm short against today's high. Where is the least, in my view, likely market that's going to take out today's high? It certainly isn't stocks. I think stocks have the highest probability of eventually taking out today's high, and I would get stopped on that. Doesn't matter if I make money tomorrow or this week. The question is, where am I going to get out, before I lose money? And I think stocks would be the least likely one. And I think the yen and possibly the bonds would be the most likely one. So that's where I would sort of focus. And the bonds are going to be driving it anyway. So why not be in the thing that's going to be driving it? All right. So those are my thoughts today on a pretty volatile Fed day. I hope that all makes sense. I'm always happy to hear questions and comments. Please check us out on crowdedmarketreport.com. Please like our video if you liked it, and check us out on Substack and et cetera, et cetera. And I hope everyone had a good one. And we will talk again soon. Thanks very much.